Yes, hello everyone. I'm Matti Vansén. I'm the country manager of Estateguru Finland. Been here for working for Estateguru for about 2.5 years now. Why I'm here today, I'm having a small workshop with you guys and with the online participants. I'm talking about how to build a bulletproof portfolio that will last in all of the market situations, hopefully. I'll be talking about my own experiences and also back up with that with the financial theory, actually. I'm not giving any investment advice that I have to tell you as a lawyer. So who am I? As mentioned, by trade, I'm a lawyer and a financial economist. I have actually written two master's theses about crowdfunding, and that is something that is really close to my heart, and maybe that's the reason why I'm working for Estateguru. I've been an investor since 2006, when I was a pretty young guy, still in school, and investing through an insurance company to some funds and so on. I've been an entrepreneur since 2014. I've been a founder in real estate investing companies that uses software in valuations, also within law. Why I started investing, this is maybe the key thing here, what I always tell to people. First of all, I wanted to make, of course, money. I wanted to buy my first apartment and collect the deposit for that. Then the second thing for me was the financial independence. And financial independence is not the same thing as financial freedom, which means that I don't have to work a day in my life. Financial independence, at least to me, means that I can take it a bit easier at some point in my life, hopefully even now. One point was also to prove my mother wrong, because I'm from a Finnish family, and in Finland, investing is still like in child's shoes, I would say. People are like almost anti-investing still, but then there are, of course, some people who have made fortunes with that. And according to a survey that Danske Bank did in 2020, for example, according to the Finnish people, lotto, like raffles, are more approved way of getting rich than investing. So let that sink in. And only like 25%, so 1/4 of the population, think that they can get wealthy. Wealthy means, of course, different things to different people. So I want to also change that stereotypes. Key takeaways that I have learned during my career as an investor. First of all, you should always be mindful of costs. Investing through funds, for example, for me, is not cost efficient. So therefore, I'm not investing through funds anymore, or any pension products or anything like that. Then, one thing that I never can stress enough about is the investing in only what you understand fully. And I will emphasize this along the way during this presentation. Then one thing is to invest in uncorrelated products, not only products that are having negative correlation with each other, but also that kind of products that are not correlating with each other whatsoever. Then, what also Seppo Saario said, have a strategy. You can, for example, read Seppo's book and follow Seppo's strategy. That's a strategy. It's not your own, but it works. So have a strategy, stick to it. You can adjust it, but stick to it. So let's go through a bit of a financial theory, how to build the bulletproof portfolio. Well, first thing is to diversify. And of course, according to the financial theory, there is only like a marginal benefit of diversifying, which means that you can diversify until a certain point, but what is left is always the market risk, which means that the benefits of diversifying are decreasing log linearly, as this line also here shows, which means that you can diversify away the idiosyncratic risk, so the unsystematic risk, but what is left is the systematic risk always. How to get actually below the market risk? And this is the, I think, key takeaway from this presentation. is that you can invest in those uncorrelated products. I will tell you more in the next slide. What are, for example, uncorrelated products? So then you can, of course, invest into different kind of products across the world, for example, across time, across space. So, for example, you can invest in stocks, real estate, whatnot. Then one point is also to have such products that have different income streams and are, for example, paying you dividend in different points of time. For example, you may have US stocks that are paying dividend once every quarter or even once every month. Then you may have Finnish stocks that are paying once every year or something like that. But having diversified income streams is making your portfolio more passive, which is actually a good thing in the future if you're up to having financial independence at some point. Also, you should always have fixed income products in your portfolio, also to balance out the risk and also to hedge the portfolio. And one thing like what is actually worth mentioning is that when you're diversifying, according to the financial theory, the benefit, as mentioned, as it's decreasing with the amount of assets in your portfolio, according to the theory, usually the amount of assets is something between 20 to 25, and after that, the benefit is almost non-existent. So yeah, and this slide is my, I think, most important slide in my whole show. You can take a picture of it. I won't be suing you for copyrights or anything. But this is actually something that I have been pursuing all my life. As in my previous work as an investment advisor, I was meeting with the most richest people in Finland and like also with hedge fund managers and so on. And I always asked that, okay, is there something I can learn from you? Then usually I asked also that, is there something you would do differently? And usually they said that I spent more time with my children or something like that, and it became a therapy session. But the main thing is that if you watch Shark Tank, for example, you can ask Kevin O'Leary, Barbara, or whoever, what do they have in their portfolio? The answer is pretty simple. It's only three things. Stocks, usually you can invest in the stock market. Usually also the rich people have real estate because real estate is not fully correlated with the stocks. So it's hopefully making you a profit when the stocks aren't. Then interest products, fixed interest products such as bonds or, for example, loan-based crowdfunding or such. That's something that is bringing you income no matter the market situation, and that does not fluctuate only with the stock market. So if you combine, for example, stock portfolio and interest portfolio, you know that there is a negative correlation between interest and stocks due to the discounting factor. But at the same time, if interests are low, stocks are usually high, and vice versa. But then if you have, for example, real estate in the portfolio, of course, that usually has something to do with interest, and you carry the interest risk, but at the same time, it's usually bringing you income no matter what, hopefully. Then one thing to mention is also equity. For me, it means startup investments, because I'm a big fan of startup investments. I'll be telling you about that a bit later. But this is actually how you build a bulletproof portfolio, and you can be pretty confident that it will be making you money no matter the market situation. So, while I'm an Estateguru investor also, as mentioned, I'm the country manager in Finland, yet I trust the products that much that I am investing into Estateguru products, and I will be showing my portfolio later in the slides, so you can see that it's actually a pretty noteworthy portion of my portfolio. I think for example, the pros and cons of investing into real estate directly If you're investing into real estate, you have to usually deal with the tenant. You may have a situation where the tenant doesn't pay the rents or something like that, or destroys something. You have to monitor the payments, and usually you need quite a big initial investment. At the same time, the return on equity can be really high because of the leverage effect, which is a really good thing, which will create more money. Usually also you have a constant cash flow. So investing through a platform, there are of course also pros and cons. For me, the pros are that there's no equity involved. So in the case of bankruptcy or in the default, I have a better situation as an investor. Usually the original initial investment is smaller, only 50 euros or something like that, so you can make much more investments. Someone else is also taking care of the underwriting processes, setting the mortgages and so on. You don't have to deal with that. Of course, cons is that I cannot benefit from the leverage effect. And the interest rate is fixed, so if the interest would suddenly skyrocket, I'm still making the exact amount of interest. But like one con is also that I cannot control the project itself. Here's actually a screenshot of my portfolio, and why I'm using Estateguru as an investment object. The main reason is actually that I'm making good use of the anomaly in the market, because there is no such a product in the Finnish market, at least, that is paying high interest yield at the same time with the first rank collaterals. So that is a pretty good product in my eyes, at least. Also, to prove my own points, this is an uncorrelated asset in my portfolio. So I'm following my own strategy. Also, it's an easy asset class for me. I don't actually spend time reading the valuations because I know how our risk process works, and I can trust those guys. So otherwise I would have 2 day jobs. So yeah, and dealing with the defaults, for example, I'm not too scared about those. And the main reason is that I know how the defaults are being dealt with. And in the case of bankruptcy, for example, we have still the best position. Yeah. Here's another screenshot of the portfolio, how I have diversified it, how much is in default, how much is late. And Estateguru portfolio is making me currently about 300 to 400 per month in passive income, so I'm aiming to grow it quite a bit in the future. Then I'll be ranting about a couple of topics. The first is startups. I love startups. I've been a startup investor since 2014, or even previously. But anyways, I love startups. I love the risks. It makes me tick somehow. Startup investments, for me, they are Excel money until they aren't. And currently about 20% of my portfolio is in startup investment. At one point, quite a bit more was in startups, so that was not probably a good thing. And I always have to mention that I have lost tens of thousands in startup investments. But at the same time, I have made 4 exits last year, 2 exits year before that, 2 exits year before that. So they are also somehow making me money. And last year, for example, the biggest exit that I made was 11.5 times the initial investment. That was Mobidiag, that was bought by Hologenic. And I think also in almost all of the European countries, Mobidiag is responsible for the PCR testing kits and the equipment. So yeah, for some reason, American company wanted to buy them out. So yeah, but this is also one thing that having startups in the portfolio, for me, they are like satellites. I have those like nuclear assets there, good stocks or whatever, and then I have those satellites that may or may become something. So yeah, so normally about 1/10 is succeeding, and about half will go into default and bankrupt. I will show later, but about 40% of my portfolio has already exited of 21 startups that I have in my portfolio. And then I have a couple of minutes, and this is actually my favorite topic. Cryptos. I think that blockchain technology, cryptos, they are the most ingenious innovation of the 2020s. Now comes the but. I return to the second slide. I only invest in what I understand. I have been investigating crypto since 2013. I have been reading a lot of books about them. I have been watching documents, YouTube videos. And for some weird reason, I have not invested in cryptos. Why? What is money? Money is either fairy dust or paper, nothing in between, right? Maybe I have watched Wolf of Wall Street too many times, but it's fairy dust. It doesn't exist, actually. It's only like a tool for freedom or whatever, how you want to see it, but it doesn't exist. So, cryptos, it doesn't exist. There's no asset behind it. I don't invest in anything that doesn't have an asset behind it. There's no intrinsic value of in cryptos. The value of cryptos is mostly based on mass movements, sentiment, and hype. Let's use an example here. Dogecoin, I don't know how to pronounce it. The inventors of Dogecoin said that this is a joke. This is a joke. This is a joke coin. The value rose to 72 billions in 2 days. Okay? That's a pretty expensive joke, I'd say. Now the value is 21 billions. Market cap, it was 2 days ago. It's 2/3 of the gross domestic product of Estonia. I can tell you jokes for much less. So, yeah. For me, cryptos don't fulfill the criteria of a currency just yet, because the currency market is only market in the world that is the closest to a perfect market. Crypto market is not. It's fluctuating a lot. There's no volatility halt auctions or anything like that. So at the same time, about 80 or 90% of all like criminal money currently is dealt with through cryptos in Silk Road, dark web. Almost all transactions are done through crypto, so there's quite a lot to do in enhancing the AML, KYC, and money laundering procedures. Also, they are not that good for environment. And for me, I'm pretty ethical investors. I don't invest in anything that I wouldn't want to be associated with on a newspaper. For example, consumer credits are out of my picture. So yeah, at the same time, as mentioned, cryptos are fluctuating a bit and quite a lot. Dogecoin, as an example, it's already 70% down or something like that. So it doesn't fulfill the criteria for a currency. Good product in itself, cryptos meaning, but I'm still waiting for something. And also, someone please give Seppo his cryptos back, so yeah. This is actually the first time I will be showing my portfolio ever. Even my wife hasn't seen it. So yeah, so hopefully she will still sign this prenup. So currently I have approximately 26% on the bank account due to the fact that we are buying a new apartment with my wife. Estateguru loans is about 21% of my portfolio. I have also listed all of the startups that I have invested in. There are losses, there are such that don't exist anymore there, but they are just mentioned here. But as you can see, there are pretty small portions and so on. And Bova Legal is the law firm that I have been a founding partner of. And it's valued at the same price as we give the new partner the ownership. So yeah, but it's now in top 10% of the law companies in Finland, so maybe it's pretty okay and could be valued higher. Then the last slide, do's and don'ts. I have 40 seconds still left. I'll make a good use of it. First of all, follow the economy. Read about national economics. Try to figure out why something is happening. Don't listen to everyone else. Question the mass movements. If someone else is jumping into a well, you shouldn't jump into a well. Maybe, or if you want, you can do it. Diversify, diversify, diversify. That's my key point into uncorrelated assets. Then don't follow the pack. My main rule is that if taxi driver is giving me investment advice, I take my money, I run, and when I get home, I hide my money under the pillow. So yeah, and invest only in something you understand. If you don't understand cryptos, don't invest in cryptos. If you don't understand derivatives, I have studied 5 years of those. I've never touched any derivatives with any sticks or anything. I don't invest in derivatives because I know how they work. Also, avoid the fear of missing out. You shouldn't be afraid of losing an opportunity or something like that. I have lost a ton of opportunities, but at the same time, I have made a good use of some other opportunities. So don't be afraid of it. Just go to the market, start investing.
So, thank you very much, Matti. So we have a few minutes for Q&A. We have some questions as well. There are some new additions here. So if you have any questions for Matti, you can ask it directly, or you can use the Workshop app. There are some questions here already, so you can add yours. Or if you want to ask it live, then you can just signal it to me, and we can get a mic to you. But first off, there is a question regarding stocks. And the question is, what do you think will happen in the stock market in 2022?
Maybe the portfolio that I showed answers that. Currently, I have actually 14% in stocks, and actually the amount is even lower currently. I have some part of that lying on the investment account, but currently, I see that the cyclical markets, cyclical businesses are suffering, which means that I am afraid that as their value still has risen quite a lot during the past couple of years, maybe now is time for a correction movement. Therefore, also I'm sitting with some money and waiting for purchase opportunities.
Okay. Another question is that you obviously work for Estateguru, and you also have a lot of loans there. But why should people choose real estate loans like Estateguru offers instead of, let's say, shares in real estate companies or funds?
Well, that's a good question. I could return to the first slide that I had, that is being mindful of costs. Real estate funds, for example, they usually have quite high maintenance costs, or even costs when you're making the deposit. So that is the main reason. I have had those also in my portfolio previously. I don't have nothing bad to say about them, but at the same time, they just aren't for me. And for example, rates like real estate exchange trust, or what is the name, but for example, the valuation of the assets in the portfolio is sometimes a bit bloated because the calculation method behind it, it's a bit rigged, to be right honest. You can Google it, how it works. And the cash flows are not necessarily real money, but they are from the valuations that are just pumped up with the new valuation in their portfolio. So that is the main reason that I don't want to spend the time analyzing the cash flows and the values of the properties. So therefore, I just feel that it's easier for me to not invest in them. But they are still a good product.
Okay. One more question regarding real estate prices. In Estonia, the real estate prices have gone up quite exponentially. But the question is, how stable are real estate prices in Finland?
Well, they have been increasing about 1 to 2% per year for the, I don't know, almost 20 years. Even during the financial crisis in 2008-9, the prices didn't come down more than like 5 to 10%, although we are also a periphery. So I would say that they are pretty stable. At the same time, I don't currently own any real estate myself. And the main reason is that I escaped the market when I saw that there is a small bubble in that sense, and let me explain why. In Finland, there's quite a lot of housing company loans, and having housing company loans made people buy apartments a lot. People who don't actually have the money, they still went buying apartments because they didn't have to negotiate with banks, which means that now, after the 4 or 5 years of amortization-free time has come to an end, there's a lot of apartments in the market, which most probably at some point will lower the prices a bit. But we'll see. I don't have the crystal ball, although I'll try to go find it. So.
Okay. Does anybody in the audience here have a quick question? If not, we can just ask one very quick question. Which asset class will earn you the most money this year?
Startups.
Okay, perfect. So thank you very much.
Thanks.